I can't describe it. I mean, to me, it's First Amendment violation. Parler's taken off. Trump, they censor the President of the United States. They stormed the Capitol and they blame him for it, but it's okay to burn down a city. You know, I'm sitting there going, ¿Qué pasa? You know, what is happening? If I could put it in really simple terms,
we're going to see a massive change. So people feel there's something going on.
What do you see coming? What do you think? What is your view today? Again, this is around January 15, 2021, and so things are changing so rapidly. What is your viewpoint on the world, the U.S., and the economy?
So I look at it from a macro lens. What does this all mean, right? So what it all means right now is, so Biden comes in next week or whenever it is. He fought on the COVID virus, and therefore he's likely to have to do something about it, because that's kind of what he promised. So again, whether we like it or not, our job is not to impose our wants. You as American voters can do that, but from an observer, I'm trying to look at probabilities. What is the probability that the US goes into stricter lockdowns as Europe is doing all over? Extremely high. Again, whether we like it or not, those are the facts we're likely to be dealt with. So if we think of peak virus in the US and the fact that the political consensus from the Democrats is going to be about more restrictive measures, and again, we've seen that all over the world, whether it's South Korea, whether it's Japan, we've seen it in China again, and we're seeing it all across Europe. So the market right now is having a huge bet. It's maximum short the dollar, it's maximum short bonds, it's maximum long equities. So they're expecting utopia. Straight to reflation. Don't worry about the biggest recession any of us have ever faced in our lifetimes. There's no overhang, everything's straight to normal. Having done this for about 30 odd years, I know that almost all recessions get this phase in the middle, and I call it the hope phase, where people extrapolate a future that is probably unrealistic at that point in time. So I worry that everyone's going to have these bets wrong. And again, there's no certainties in this world. We deal in a probabilistic world, and I worry that we probably got some more downside again from the stock market. We've probably got the fear and a real economic slowdown that's not priced in. There's more pain to come on Main Street. There's more pain to come from small businesses. There's more pain to come in unemployment. That's not going away yet. My guess is it starts to improve in the second half of the year and really picks up after that. So I'm pretty anti-consensus here. Consensus is everything's fine. My view is it looks fine on Wall Street, but when you speak to any friend of ours who owns a restaurant or a bar or any service industry, I mean, they're decimated. And it looks like more restrictive measures are coming, so it's only going to be worse for a while. There is a secular shift going on. I grew up in the UK, and there was a massive societal shift, much like we're seeing in the US now, back in about 79, 80, 81. And what happened was we lost the steel industry, the shipbuilding industry, the coal mining industry, and the tin mining industry all in one go. And that never came back. And guess what? It's pretty difficult to retrain a 55-year-old steel worker into the services economy, for example. So it creates structural, rigid unemployment for extended periods of time. And those cities took a long time to come back. Many of them never came back. Okay, so given that set of facts, what are the government going to do? Well, we're already hearing about a larger stimulus than the one that we've just had. So there's a larger stimulus in the making. If the market falls, if economic weakness continues in the way that I think, the probability of a larger fiscal stimulus goes up. And the probability of the central bank being involved goes up. So one of the big themes that I'm sure you guys have been following, as I've been following, is the kind of devaluation of fiat currency, the excessive printing, and what that does to hard assets. And that, I think that theme is, gold's been trading sideways for a period of time now. But my guess is all of this kicks back into gear again once people realize that, okay, we're actually not through this. There's more stimulus. Europe needs to stimulate again. Maybe Japan needs to stimulate, and a bunch of other countries as well. And that plays into the hands of many of these hard asset trades that we've all looked at. So the central bank digital currencies is a big movement. The IMF have told us about this. So have the ECB, the Bank of England, the PBOC in China. Everybody's talked about it. And they're essentially talking about the fact that monetary policy has run its course. So the only way monetary policy can work is if it's tied to fiscal policy, which is the MMT style discussion. That's coming. Again, whether we like it or not, it's coming. So I think purposefully to have Yellen in means that those two offices basically become more linked, because if not, the central banks can't do anymore. There's what, just keep printing money for what? To make the 1% richer and doesn't help anybody else? That doesn't work. What you need is stimulus that helps those restaurants that our friends have, or the dry cleaning business, or whatever it is. And there's no way of doing it because the banks won't lend.
If you don't have a good balance sheet, you can't borrow any money. But they need to get the money into the hands of Joe, Mr. and Mrs. Public. So by Yellen and Powell marrying up, they can bypass the banks and just inject cash straight to mom and pop. I mean, is that how you see it? That's how I see it.
Exactly right. And that's what central bank digital currencies do at core. They create a banking function from the central bank that they could say, hey, Robert, I'm going to stimulate you this much and I'm going to charge you a different interest rate. So you could have a negative interest rate because you're a saver, and a student could have a positive interest rate. All of this, the behavioral economics of monetary policy and the combination of monetary and fiscal, is all coming over the next few years. So we're going to see a massive change. And in the end, yes, it is helicopter money. There's no way around that.
If I could put it in really simple terms, is the problem with the dollar or any fractional reserve money currency is that you're incentivized to spend it. You know, and it goes down in value the longer you hold it.
Correct.
And so what that does is it causes people to spend money or get into debt as quickly as possible, because the money is going down, its value is dropping. It's not a store of value.
Yeah, and you can look at that in a number of ways. If you look at inflation-adjusted wages, median wages in the United States, they've basically stayed the same since 1974. But other things have got more expensive versus wages. So people have taken debt to fill that gap. So people feel there's something going on. They don't really understand it because it's not the dollar falling against the yen or the euro. It's all of them going down because they're all printing money. So that's why gold keeps stair-stepping higher over the years. It's basically holding its value and reflecting that all of the fiat currencies are going down in value. So I actually follow gold versus a basket of 27 currencies, because that shows you what it's like as a world currency. And I think of gold as a world currency. Works perfectly because it holds its value as these currencies keep printing.
So given let's say you have a crystal ball, if you are looking into what to invest in the future, what trends do you see that people may not see yet? What do you see coming?
Emerging markets, because the US has dominated so much this last cycle that nobody invests in emerging markets anymore. India, right? There's ETFs trade on India. India has a phenomenal demographic, high savings rate, low debts. It's completely the opposite of the US or Europe in terms of how it looks structurally. The probability of making money in India over the next 10 years, extremely high. Because people have to understand this. We have to take control of our own finances now. We can't leave it to some other guy, because they don't actually care if we don't have the money to retire.